Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, the stocks you see on your screen will be the stocks featured in this recording. And if there's a particular stock you're interested in, you go directly to it using the chapters feature in this video. All right, let's talk about the economic news of this week. First of all, we had the PPI report that came in a little bit softer than expected. Then we had the CPI report that was pretty much in line on the inflation side of things, and it was the lowest reading since March of 2021. And you can see there that it says inflation on consumer staples has eased quite a bit. So the market clearly liked that. And then we had the retail sales report that came out, and it showed that the consumer is still finding a way to spend here in the U.S. So big spending on the consumer, and the market just continued to take off. Now, today we had some weakness in the housing sector, but the market seemed to like that as well because shelter's been one of those areas that's been stubborn on the inflation side. So weaker housing data is good, apparently. Let's look at the chart and we'll talk about how all this applies to where the market is. Boy, what a difference a week makes, huh? So here we are just rocketing back to the upside following that big move on the unwinding of the yen trade. And by the way, the yen carry trade seems to be resetting itself. We'll look at the dollar in a moment. But there is the definition of a V bottom. Some people don't believe in V bottoms. I found it to be not really a big portrayer of where things are going to go one way or the other, but that's a perfect definition of one. So we've gone straight back up since then as the market is looking ahead towards those Fed rate cuts. We're down to the Fed fund futures pricing in 100 basis points of rate cuts this year, down to 25 for September, 25 for November, and 50 basis point rate cut in December. I will see. I don't know why the Fed needs to do anything. I think they're probably pretty happy with where things are right now. So we'll see if they're going to be a little bit late to the party as the economic data continues to come in. And by the way, next week is going to be huge. We have the annual Jackson Hole Summit where the Fed will be there and all kinds of talking heads will be there. So expect some volatility out of that next week. We didn't really have a whole lot of volatility except for a move to the upside here. Normally, you think of volatility as downward moves, but here we had a vertical move back to the upside. We had a gap up in yesterday's move. Thought maybe we might do a little backing and filling today. Nope, we continued higher. And this line right here, you can see is the high from the beginning of August. I showed this to our alert subscribers during our insiders meeting last night. That's for alert subscribers only at ewotrader.com, and said that that's where maybe we bump our heads a little bit. We're back within this tap box, which is the time and price projection. And it's a great feature of the software, great Elliott Wave software. If you haven't gotten a copy of this software, go to hub.com. The AI signals are available now to a select number of founders members, and there's only a few spots left. They were doing 200 of them. There's only a few left. So make sure you go to hub.com and get in line for that if you haven't already. So coming back and taking a look at this gap, at some point, I think we'll come back and fill that. As you know, most gaps get filled. We are a little bit overbought from the separation of the 10-day moving average now. So maybe a little quiet start to the week with the Jackson Hole Summit next week. But we're right close to getting another 1030 cross. This one would be a bullish cross with the 10-day about to cross above the 30-day moving average. No harm, no foul from the unwinding of the yen carry trade. We're right back to where we were before kind of all that concern started. And now we see if we can go higher from here. I think if we continue up, and I do think we need to do a little backing and filling first, but if we continue higher and take out this wave 5 high from July, the question will be, does that 5 move over? Is there a way that 5 could relabel to a 3? It's a possibility. I just don't see that happening because I do think the Fed will take their time and possibly be late on cutting rates, but we'll see how that plays out. I did have a question on showing the weekly chart of the S&P. So I thought I'd go ahead and do that. We haven't looked at the weekly chart in a while. So you can see that we're moving back up here. There's that same line from the daily chart. Looks like we're going back up to test that wave 3 high, possibly if we can break above this little bit of resistance right here. But I wanted to show you the DMI, which is one of my favorite confirming indicators for Elliott Wave. And you can see that the ADX is kind of losing steam. We've got a couple things going on here. First of all, we've got a lower high there in the ADX, and it's rolling over a bit. Now, the two directional indicators can't make up their mind. They're just kind of going sideways, but not nearly the strength in this move back to the upside here. So I think that's worth keeping an eye on next week as well. All right, so let's go ahead and move back over to the daily chart, and we'll take a look at some other points of interest here. First thing we want to look at is rates. So we'll look at the TNX, and rates have kind of stabilized a bit following the big drop on that Monday, hovering right here around that 161.8% fib extension on that C wave to the downside. So rates stabilizing, albeit at a lower area. And if you remember a few weeks back, I was talking about how I don't know if we wanted to see um, the TNX go down to the 161.8% level, because if rates come down that far, I think that's starting to show more than just anticipation of Fed rate cuts. I think it's starting to show weakness in the economy. And we are seeing a few cracks, but nothing too severe just yet. But rates staying down. And I thought I'd go ahead and show you TLT. Y'all ask about this all the time. And by the way, as a quick reminder, we are giving away one of our level 3 subscriptions at ewotrader.com each month this year. All you have to do to register is post a comment underneath this video. Our level 3 includes our time strategy, which is a sideways strategy, income-based trades, calendars, butterflies, things like that on stocks that have had a big drop, so they go sideways. Our volatility strategy, which is looking for breakouts from triangles, and then our AI-infused impulse strategy, which looks primarily for zigzag patterns within the wave 3. We're thousands of dollars, and again, we're giving away one free each month this year. So just post a comment under the video and you are registered. All right, so back to the TLT. We are seeing a bid here in the longer end of the curve. So we came back down after a big spike up on that Monday as money went rushing into the bond market as a safe haven type thing. That calmed down. So what goes vertically up oftentimes comes vertically back down. You know the rules. No security in any time frame gets too far from the 10-day moving average. So we came back to the 10-day moving average. But now we're starting to creep back up. So there is some money that's still a little cautious and moving into the bond market, which will be quite interesting to see how that plays out. While we're talking about that, we'll talk about the dollar here real quick. The dollar has stabilized a bit, but some weakness, as I mentioned earlier. Some people are kind of moving back into that yen carry trade. So a little bit of weakness, but then a little bit of a move higher there as people move back into shorting the yen, buying other things. So right in this area here, I think is a pretty good place for the dollar. I'd like to see it creep back up towards that 104 level, but we don't want to see that dollar collapse all the way down, nor do we want to see it get too strong. Both of those, I think, would be negatives longer term for the equities markets. Let's look at the VIX. The VIX is way back down. We had wondered if that 17.5 level that acted as resistance for so long was going to act as support. Nope, we've just come straight back down from that big spike we got up to 65 on the Monday just before the market opened. And we're just right back down into the same range that we've been in for most of the year, between 12.5 and 17.5. We're right smack in the middle of it. Maybe we get a little tick up in volatility to start the week, again, as there's anticipation of what may come out of Jackson Hole, but it's going to be really interesting to see how that all plays out. Looking at the DIA, these charts are all going to look pretty similar. Big move back to the upside here. You can see I drew a line here, drew that last night as well, wondering if we do kind of stop here and pause for a bit, maybe come back down and test that 400 level for a test of support. We'd start to see a pattern of lower highs. So that bears watching as well. But first and foremost, do we come back down to 400, fill this gap, test that as support, and see where we go from there? If we look at the Qs, looking here, as you would expect, a bid has come back into the Mag 7. Maybe you wouldn't have expected it. I wasn't sure it was going to be this strong, but that B wave in this zigzag pattern is still qualified. It's still right at the 61.8% level. So we could see a rollover here if, I don't know, Chairman Powell says something the market doesn't want to hear about cutting rates, that they're in no hurry, whatever. But that is qualified. So it bears watching. If we move higher here on the Qs, then that could become a disqualified zigzag. Remember, there's a difference between qualified and confirmed. This is not a confirmed downward zigzag. It's just qualified now. And it bears watching with the strength of that 61.8% fib level. We're a little bit overbought here from the 10-day moving average. but not tremendously so. So it wouldn't be too surprising if we moved higher. But it just seems like the market wants to take a break at the beginning of next week. Looking at the IWM, and that's been quite interesting as a bid has returned into the small caps. I saw some talking heads on the financial networks today feeling like this was a good place to be with all the big run that's occurred in the other markets, that maybe you want to look at the small caps. We are back above 210. We broke above it yesterday. Wanted to see if we could get some follow through today. We did barely, but it definitely counts as a follow through day. So, can we hold this 210 level now? And do we start to look at a new trading range here between 210 and possibly up to 230? The IWM seems to like to move in 20-point ranges. At least it has historically for the last couple of years. So we'll be watching to see if that 210 level holds on any weakness in the markets to start the week. But certainly encouraging that there is some risk taking here for those of you that are long the market and want to see this move continue higher. You want to see those small caps participate, I think. Let's take a look at the cryptos. Bitcoin, you can see I've drawn a triangle there. Bitcoin is forming a pretty nice triangle. It's a big one, too. The bottom is down at that spike from that Monday at 50,000 up to 70,000. So it's a 20,000 point wide move here. So 20-point wide move in Bitcoin, $20,000 worth. And the midpoint is exactly at 60,000, which has acted as support resistance for better part of this year. And it's interesting that the exact point of the triangle is right there. I think we're going to see something happen in crypto next week. Can't tell you which direction, because when we look at these, you never know which way things are going to go. You just don't pick a direction on these triangles. Just let it break out and then go along for the ride once that happens. I did want to show CLSK. Not a whole lot going on with Ethereum, so we'll incorporate this. Another one that y'all ask about for taking a look here at crypto land. So this is a miner. Came down here and we're finding support down here just above 10. We broke below it on the Monday, but back above it. You can see that we've corrected the oversold condition. We're back up to the 10-day moving average. So we tapped that on the high today. So the question now becomes, do we see a move back up to 15? And I think we do, unless that chart of Bitcoin shows a massive break to the downside. I feel like 15 was support for so long on CLSK. There's a likelihood that we go back up and test that. What was support? Is it now resistance? You know, the old expression. So we'll keep an eye on that as we move forward in the crypto land. Now, as we move over to the metals, let's look at GLD, which had a really nice bid in it today. And I think that's interesting. So the market's definitely looking towards those rate cuts, especially in the world of the metals. Big move higher here. And if you follow TradeFinder, this actually was our TradeFinder post from last week. And if you're not familiar with TradeFinder, we do it every single Tuesday at 1 p.m. Eastern Time. You can register with the link that you see on your screen live during market hours. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a tremendous community that we have at TradeFinder. So please join us next week. So looking at the chart of GLD, you can see that big bid move that we had today, as I mentioned, and we're right at the 230 level. Breaking above that is important because that was the high from mid-July. You can see this triangle. That's an idea of what we do in the volatility portfolio at Evo Trader. We look for these triangles. So we had a breakout, tested the breakout, and then followed through today. There's three different ways stocks can break out of these triangles. Sometimes they take off and run. Sometimes they do this. They test the breakout and then go. And then other times you have a false breakout, which was still a potential here, but nope, it's not going to be. We are going to continue back to the upside here on GLD, it looks like. So when we see something like that, we want to see if there's confirmation from the DMI on a continued move. We're getting great separation between the two directional indicators. The ADX is moving higher, but it's really meaningless unless it gets above 20. So even though it looks like perhaps there could be some more follow through on GLD, I'd like to see that DMI confirm it with the ADX rising just a bit higher and that separation between the two directional indicators continue. We might be off to the races on GLD. We'll see. So let's look at silver as well. Silver hasn't had the same move as I'm sure you're probably aware that GLD has. Gold but it is moving up. It had a nice bid today as well. And we were able to get, which we weren't yesterday, back above the 50-day moving average today. But you can see we're bumping our heads against some resistance right here around 26 and a half. We're not overbought, so SLV could maybe play catch up to GLD, but we'll see if this level right here acts as any support or any point of resistance as we start the next week on SLV. But it is at least following along, even though it's got a ways to go to catch up with what's occurred with GLD. Let's take a quick look at natural gas, UNG, and we kind of nailed this one pretty well, I think. We talked about the wave 3. It didn't have a zigzag. It was a mono wave. You can figure out where a wave 3 is going to end if you have a zigzag, but when it's a mono wave just straight down, it is difficult to know where the wave 3 ends. But the commentary was whenever the wave 3 does end, it'll likely go back up and test 15 because that was support for so long. Again, that was support, now resistance. And in UNG, clearly the answer to that is yes. So right back up to 15, and we rolled over today back down. We're only at a 29% extension on the wave 4. That could be enough. Elliott himself liked it to get to 30%. He acknowledged 23.6 as a fib level, so the algorithm will actually label that, and the software uses the algorithm exactly as Elliott wrote it. But he preferred it to get to at least 30%, and we're right there. So barely in an area where Elliott would say, okay, we can consider that potentially the end of the bounce, but we'll watch natural gas next week and see how it moves. And if we are moving down to a new low, it would be kind of surprising with wintertime not that far away. The market looks ahead, but so far natural gas doesn't seem to care, doesn't seem to be interested in it much at all. Let's take a quick look at oil, also in a triangle, and we do have a strangle on this in the volatility portfolio at Evo Trader. A really well-formed symmetrical triangle here on USO. Something's going to happen. USO was down today. Oil was down, but you can see there's a doji there, and we didn't break that lower trend line. I know we can draw trend lines in different places. I don't get real technical on exactly where the lines are drawn. I just want to see the appearance of the pattern. But I would not call this a breakout to the downside. Just testing the lower trend line there. And with the doji, who knows? Monday we could be right back up. But something is going to happen in USO over the next couple of weeks, I believe, that we'll see a pretty decent breakout. And it could be as much as 10 points on the USO based on the width of the triangle from the high to the low. That's what you expect to see the breakout move to be same price level from the point of the triangular breakout. So we'll be looking for that next week. So lots to talk about, lots to look at next week. Boy, next Friday, we'll have a lot to talk about in the recording for sure. All right, let's go to some more stocks of interest that you all have asked about. One of them was Palantir, PLTR. Good time to look at that because it had a heck of a day today, but we are getting a little bit overbought from the 10-day moving average. You can see the separation there. Getting a little bit vertical here as well. So once again, maybe a little calming is needed. We did close off the high of the day, but still a big day. We opened, just took off, closed at the midpoint. So not too bad, but still a little separation here. And it seems like at some point in time, we're going to want to test that 30 level and see if that holds, because that was resistance back in the middle of July. And we got turned back. We turned and ran and blew right through it this time. So maybe we need to test it and see if that's indeed support. It would make sense with the fact that it's a little bit overbought at this point in time. JEPI asked about, which is the JP Morgan Equity Premium Income ETF. And once again, it shows a bid coming into some things that are a little bit more defensive minded, an income based ETF. Big move to the upside here as well. It followed the party yesterday with the gap up. Seems like everything gapped up yesterday. But the issue here is that we are at a point of potential resistance right here at 57.5. As you can see, it was resistance back at the end of March, kind of tested it again in May, tested it again in July, into July. And then here we are mid-August, and we're right back there again. But we're a little bit overbought here. So maybe some backing and filling here. But if we could break above this level, and if you are long this and you want to see it go higher, you don't want to see it go higher right away. because we're too overbought. It's likely not to hold if it breaks above the 57.5 level now. What you'd like to see is some backing and filling here, perhaps even fill the gap, at least consolidation underneath the 57.5, then break above it. Then you have a move that could be sustainable. But when things break major points of support or resistance, when they're already overbought or oversold, they tend not to hold, and it would reverse back down. So just a couple comments there. Apple, we haven't looked at that one in a while. I'll ask about that. Pretty interesting pattern here on Apple. You can see that we had this downward zigzag. We came down to the 100% level here. And look where this wave 4 labeled. I don't really like it when the wave 4 or any of the points are labeled by just basically one huge bar. But it wasn't that much more severe than what happened in the next day on the Tuesday a week ago. But look, it's right there at the 61.8% fib level. Again, my favorite of all fib levels. And so far that's held, and we've had a nice march higher here in Apple. We filled this gap from the beginning of August. We're back up to a little bit of resistance right here, but not too significant. And we're not that overbought on Apple either. So this could be a place that continues higher. We'll see what happens when it comes up to test the previous wave 3, but it looks destined to do that. And then we'll look at it again. So we completed this downward zigzag, so I can just go ahead and take that off. And then we'll look to see what happens if we continue up to that wave 3 test. UA, you wanted to look at that one. Under Armour, another stock we haven't looked at in a while. So I like it when you all ask about things that we haven't looked at a whole lot. And you can see it had a nice breakout move, pretty significant gap up here, took off. Now we're consolidating. We got to be concerned about the gap. Our AI data shows us a high percentage of gaps get filled, like 94%. But we've talked about in the past, you never know exactly when it's going to get filled. Could be sooner or later. But we are a little bit overbought, still separated from the 10-day moving average. It's consolidating nicely, but it was a real vertical move. So I think some caution here. We've come over and filled this previous gap that we had back in the springtime right there. So we've filled that gap. So now we'll see if we can mount any sort of a further move. If you're interested in going long here, I think you want to see it break above 8. So at this point in time, it's a bit overbought. The separation, the vertical move. If it can consolidate itself here and make a run and break above 8, then I think you have something. But if you're not long now and you're waiting to go long, I think you want to see it break above 8, and then that would be a great entry point. We'd at least come up and probably test these highs back from the beginning of the year, 8.5 or so on Under Armour. So awful lot to talk about, and we'll certainly be focused on that Jackson Hole Summit to start next week. We'll talk about some of the foreign markets in next week's recording. A lot to talk about in this one. Hope you have a great weekend. Thanks for watching. Look forward to talking again soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.